What's going on, everybody? The content you are about to consume is from a recently recorded Twitter space. So for this one, it's just going to be audio, no visuals. But going forward, all of the spaces will be uploaded to YouTube with images to match. All right, what's going on, guys? We're going to get going in like 5 minutes here. Coming off a high, I just took out that first game back on Fortnite. We got that dub. That was crazy. I got a little rush. So I'm getting amped up. I'm just getting everything logged in on here. I'll wait for some people to join. Don't have too much of a game plan, but we'll be all right. We'll figure something else out to talk about. Man, I gotta hydrate. That was a long game, man. I forgot how long it takes. It's been 3.5 years. So since I became a, I don't know how to say this. I guess 24/7 market minded. Loved playing video games, especially during the winter when there's no baseball on TV. But right when COVID started, I kind of kicked the old Fortnite, and I started playing MLB The Show, MLB game. Played that for probably till about summer, and then that was it. So I'm really haven't been in on the video game grind, but let me just share this with the group also. I forgot to do that here. I forget how to do it. Oh, here it is. Copy link. All right, let's see. Give it a couple more minutes. As always, if anybody wants a mic, just request. I'll bring you up if you want to ask a question or speak your mind or something. But I got some charts we can go over. If you guys want me to look at any charts specifically, you can comment on this post or send them or come up and talk it out, whatever. But we'll see. All right. I got a lot of people who sent some charts to me before. I actually got to do them still. I thought it was going to take way longer for me to re-download, and anybody who plays video games, it takes some time, but a lot of funky names. I'm surprised that people are trading a lot of these. Not a bad thing necessarily, just I think everybody's gone in waves. Everybody started out on the penny stocks, then they went into the squeeze names, and then from the squeeze names went into options, and specifically the large cap options, and from there it's I think everybody went into SPY and Qs for a while, and now people are going back to those individual names. I'm seeing some wacky ones right here. AMC GME. In short, my response was, you're likely not going to like my opinion, but I'll chart them anyways. WBD, CVS, IWM, Kava, Palantir, JPM, JD. There's a lot of them, but Again, if you guys, anybody who's listening wants to hear any specifically, feel free and just reach out. Oh man, we got Captain Mara in the building. What's going on, man? All right. Well, let's do this. Before we get going at all, I'm just going to post my daily chart. Let me just screen grab it real quick. Here we go. NQ, and I'll have the one with limited annotations. So, ready? We're coming on over here. Let me slide this. Oof. This function on TradingView with sliding the tweets onto is pretty sloppy. So let me just do this one that we need to know. Okay. All right. Hold up, man. And all right, I'm posting it right now, and then I'll share it up top so you guys will have that for reference. And then as we go through specific names, I'll post them again, and we can throw them right up top, and we can go through them that way. But ultimately, today was a pretty sloppy day by my standards. We took the 2:00 silver bullet, and well, I'll actually show you because it was a little tricky, but it ended up taking quite a while. So that's what really drove me crazy. It actually took like an hour and 30 minutes before it finally got its move. But there was one setup inside there that held true throughout, and turned out to be a pretty damn good one. So we'll get into that as well. That's on more of a smaller time frame, which we'll break into. Usually I go top down. So all right, well, first, all right, up top, if you're looking right now, you can click up on that tweet. You'll see NASDAQ daily. Now, you might say, look, I don't trade QQQ. Who cares? This, to me, is helpful for anybody, no matter what you're trading, really, specifically in terms of tech. If you're looking at tech, period, having an overall idea as to where NASDAQ, or what you think that possible draw on liquidity would be on NASDAQ, it can be quite helpful. Just by looking at this, like, to me, going back weeks ago, and I have the tweets pinned under there just for reference, but specifically, I'm still sticking with my overall game plan. I know, obviously, today it wasn't anything too progressive towards that ultimate goal. We kind of just swept liquidity on yesterday's high and fell a bit, but I have to tell you, I do feel myself starting to shift immediately at that 15,468. So the thought process behind it is, currently, I know this is going to sound crazy to some, but the market structure on NASDAQ right now is still bearish. Reason why I would say something like that is, what has more recently been swept? Was it a swing high or a swing low? And again, the image is there for you. You'll notice that the most recent swing that we've had, we actually swept that low, creating bearish market structure to the downside. Now, typically, when you would get that bearish market structure shift or a move to the downside, my expectation would be to look for the, quote unquote Mando model, where we find a low, retrace higher, and I'd be looking to short in a discount bearish imbalance, which would be discount in particular would be over 50% of that range. So, if you look to the left where it says that October 12th tweet right there, that high was right inside that discount area, and specifically that discount bearish imbalance where we wicked right into it and melted down. Now, the difference this time around, and let me see if I could just pull up the initial tweet that I had, so you could see, again, thought process. I like to put my ideas down on paper, so unlike a lot of other people, I can't waver from them. So also, it's a sense of credibility, and I'm not going to put something out that I don't think has a good potential of happening. I think I like slow. I'm just searching it right now. Here it is. Good. and I'll pin this one up top. So this is the tweet that I'm referring to right now, where it says, I like this low a lot, golden pocket, bullish imbalance, specifically 50% of it. Test on the daily after a bounce, taking out the swing low from 525. I like 14,979, and obviously we're about 400 points higher than that, but I came to that conclusion using multiple different variables. One, we took out a higher time frame swing low, the 525 low, which also coincided with a bullish volume imbalance, aka a gap up, however you would refer to it, while also being inside that 62 to 79% retracement area. I love that area. You'll notice if you start to examine that and you're starting to map out these fibs on your, really any time frame, but any price run in which a higher low is taken out, you're going to notice that the market tends to drive into that area specifically. To me, there's an algorithm delivering price. It's coded in a particular way, and that's why we see this thing recur so frequently. In addition to all of that, I thought to myself, it's a lot. It's very easy just to say that, but we need to, I got to be able to show some proof. So obviously, anytime I'm watching one and it occurs, I post it on Twitter, but also I made a chat in the group Discord just to continuously post it in there as well, to show the level of repetition behind it. This is something that, again, happens quite frequently on a ton of different names. And, particularly today, actually, it happened 3 times on SPY. So I can actually pull that one up too and show you guys just how often this tends to happen. Now, obviously, everybody who's ever looked at the market or has been trading, for, really whatever amount of time, you'll notice the market just doesn't go up or down. It does have those price fluctuations, right? And, again, it's just something that I personally didn't say, oh, wow, it always goes into that 0.62, 0.79. I think that's, in addition to the ICT concepts, I believe that's also an idea that comes from just standard fib trading. The one way that I'm a little bit different from that is I don't necessarily trade off of fibs. Are they accurate? Yes. I mean, sometimes it doesn't meet my criteria and it'll still continue. But just for an added layer of confidence, for me personally, I like when we get the overlap with that golden pocket, or really realistically anywhere in discount. So below that 50% on a bullish range, above that 50% on a bearish range. I like when they overlap. You get that fib retracement. You also get that bullish imbalance right along those lines, and sometimes it's so beautifully perfect it's hard to look away from or deny that it's a real thing. But it happens over and over again, and that's something that I've really become locked in on, I guess you could say. But just for reference, I'm gonna pull this up. I'm gonna screenshot a little bit on the 5-minute chart, and I'm gonna kind of make a little mini thread on it just to show you guys like how often this type of move actually does occur. So let me just zoom in a little bit more, and we're going to go through literally each little bounce on SPY after making that 12 o'clock low. So here's our first one, and I'll have it up there in just a second. Okay, number 1, and I'll leave the time in there so you guys can see it as well. Here we go. Boom. Okay. Let's pull this up. Here's the first time. Okay. Oh, shoot. I forgot. I didn't leave the fib lines in, but that's okay. We'll make it work here. And I'll talk you all through it. But here we go. Where are we? Did it post yet? Yeah, it did. Okay, good. All right. I'm throwing it up in that top. So right up here, you'll see Mando model. Now we'll look at it. Of course, this time around I cut off the fibs. I won't do it next time. Sorry. But from your swing low, so your little green, the last green candle that led to that up move in which we took out multiple smaller time frame highs, right? 5-minute highs. Retracement back down where? Bullish imbalance in discount. You might be saying, how is that a bullish imbalance? That doesn't make sense. I crunched the time a little on this. I went down to a 1 and it created a 1-minute bullish imbalance right down in there, from which we reach down, take off. So next, ready? And this is all in the same price run. You're going to see it just happens over and over again. That whole entire run up from that low. Ready? Let's go. 4 right over here. So number 2. Let me get the times in on this one, just so you guys can see. Here is the second. Posting coming up right now. Okay, and it should be directly under. Very nice. So there's the second little run right here, where we have new swing low, right? That little low that came back into discount previously, that began the run up through the next swing high. There's your range set. Where's your retracement down to? A 50% discount, bullish imbalance, takes off yet again. And this actually leads, it's actually going to be funny. And anybody who's, listened to me talk before, a lot of the stuff that people are taught, I kind of call BS on. And one of them being like the stereotypical quote unquote bull flag and everything like that. Like, you might just say, well, Mando, that's just a bull flag, right? Well, there's certain instances where it would actually be a bull flag, and there's certain instances where it would not be a bull flag at all, right? And you need that bullish imbalance. That's why it works. Without that, you're kind of just hoping and praying that it's going to follow that bull flag, right? How many times have you heard somebody say, or maybe even yourself have said, oh, it's a failed bull flag, or it's a failed bear flag, whatever, right? It's just because the missing piece there is that imbalance that is creating that springboard from the bottom of the quote unquote flag, right? So we'll do it again one more time right here. I'm gonna, because this is literally the entire run higher, and I saw this and I was just like, wow, that's crazy. Coming again, posting right now, and again, this is the exact model. It's on YouTube if you want it in more depth. This is, again, something that I see it happening every day, multiple different names, and I'll show you it even happening on the 1 hour, and that's what led me to believe that we were going to reverse towards the end of the day here. So last one has been uploaded here, so let me just come on over, and I'll post that one up top in the little nest area. But again, from that previous little low that we made that created that move higher off of the bullish imbalance and discount, creates a new price run. You get your retracement down into where? Discount, bullish imbalance, and we take off yet again for one more time. Now, at this point, you'll notice we get a move that breaks above our, let's see the exact time, 11:45 high. Okay, so I'm gonna just zoom in really quickly, take a screenshot of that, and then I think we'll be good for a little bit. But ready, right here. I'm zooming in one more time. And good. Let me throw this up here real quick. And on this one, you're going to notice it's not the same situation. You're going to say, oh, well, the Mando model didn't work there, which in this case, you'd be right. Okay. So ready, here is the last chart and just pretty much the overall, picture that was painted for me when I was looking for that 2 p.m. silver bullet trade. The silver bullet is just one of these PD arrays or setups that occur within the 2 to 3 o'clock hour. Doesn't have to be formed in that 2 to 3 o'clock hour, but price is going to get into that specific level at that time. So I think, did I post it, or let's see. Nope, didn't go up yet. Whoops. Hold on. Oh yeah, it did. No, it didn't. I lied. All right, ready? It's coming now. And then I'll just throw that up into the top part, and then we'll be all right. So ready? Here it is. Boom. And oh, great. Okay, cool. I'm pinning this right now. Good. All right. So that last image that you see right there. So at 2 o'clock, which if you're looking at the bottom, it's the 14, right? So if you notice, I have that black box there, right? So that black box right there is indicating a setup called a breaker. And in this instance specifically, it's a bullish breaker. All right. Now, how could you, come to the conclusion it's a bullish breaker, right? Well, the setup looks the same. It's not always going to be as crystal clear, but once you see it, you can't unsee it. And I can vouch for that. And I'm sure people who have listened to me talk in the group as well can vouch for it as well. This was actually the trade that I posted yesterday. It was just on the other side of it. I took the bearish breaker, and I took it down for about 30 points or 35 points, I think it was. Whatever, it's posted on here. But so if we take a look and you see how we're starting to like round out here at 10 to like 11:30-ish, right? That last low that we made, right? That would be our initial low of the breaker, okay? So we've made a low. We then come up here, and with that black box candle, right, that box goes up to the high wick, okay? And the high wick took out the high from 11:15. So there's our high. And then we need one more low to create that bullish breaker. So we look to that low at 12 o'clock, and that would be our low. Now, why would this bullish breaker be useful? I guess, how would I say this in, shortly, I guess. Is it useful until we get back up there? No, it's really not, right? But it is an idea that when we get through that high that we made on that bullish breaker, so low, high, lower, low, when we take out that high, you're going to notice price comes back down in, it's going to test it, and we would look for price to kind of take off and make a move from there. Now, I took the trade, and while it ended up working out, it didn't quite net as much as I would have liked, but this thing took forever. We were on live for like 2 hours, or not even 2 hours. I'm, over exaggerating, about an hour and a half, and we're just sitting here waiting for it to play out. And obviously, when you're sitting in the trade for a while, you automatically thinking all the worst possible things are going to happen, right? You're automatically thinking and telling yourself, oh, it's not going to work out. I should get out. I should move my stop. I should do this. I should do that. But I decided not to do that, and I started to stick it out. And ultimately, I understood what my risk was going into the trade. From where I picked up the breaker in the first place, I was kind of just hovering around flat, so it wasn't like I was down really too much of anything. And also, I went into it with the understanding that, on this trade, I can lose about 17 points. So 17 points on NASDAQ would be about $340. So I went into it risking that 340, anticipating a move up to that swing high. I'm still bullish, right? That's my daily bias. That's my overall bias right now. Not for much longer, but I still don't see, or I wouldn't be able to justify as clearly a reversal from this point here. I want to see liquidity get swept up at that 15,468 prior to that move down next, right? So obviously at 255, we get all the way to the bottom of the breaker, back into the bullish fair value gap that we really started the run at 2 o'clock, which I didn't take. Why didn't I take that initially? It was the first imbalance tested within that silver bullet time frame. The reason why I didn't take it was because I was anticipating the breaker. So to me, getting that move above the breaker's high, that was confirmation for me that our next move was going to be up, but I can wait for the retracement and get some sort of better entry. Now, while this was happening, you'll notice from about 205 to realistically like 235, we were kind of just sitting there, and I'm saying out loud, this is taking forever, but I'm not going to be a chaser. If I'm a chaser, I'm just basically adding on 10 more points of risk if this thing doesn't work out. Also, it would essentially take 10 points from what I could possibly make as a result of that. So I decided to wait, and I'm glad I did. I ended up getting a pretty good entry. So despite all of this chop that occurred within the breaker, I was still kind of just floating on even. Never really got close to getting stopped out. On that low wicket 255, I was pretty close, but not quite. So eventually, as time goes on, we do end up getting that move, taking out that high from 230 and running back into the bearish imbalance that we rejected from initially earlier on in the day. And, as we float on throughout after hours, we're still holding on to that breaker. We actually just left it again to the upside. So, you know, are there going to be certain situations where it might take forever for a trade setup to play out? Yes. Trading options during that time is very difficult, and that's kind of why, I still trade options, but not nearly as much as I trade futures. And to me, the biggest differentiator at that point is, look, there are days, today was one of them, where price action is just not as great and it's not moving as quickly as one would desire. Now, if you're trading futures during that, it's not going to hurt you as bad. You're not dealing with that theta, right? Especially if you're trading short dated contracts, which really that's all I do. I don't take really anything far out. The way that I look at it is, if I'm trading something with my scalper mentality, I really have an expectation that that move is going to occur pretty quickly. And if it doesn't, I need to get out and revisit later, specifically when I'm trading options. With futures, you have a little more leeway. Anyone who is listening to the live today can attest to this. I really, it was annoying. It took forever. I was frustrated by that, but not at any of the concept that I was looking at. And, clearly, looking back at it now, you see it worked. It just took forever, and that sucks. So, how can someone avoid that, I guess, is a good question. Well, do you really know at which speed the market is going to deliver at? Not necessarily. But one way I guess you can combat that is, and this is me, saying something that I don't do, but you just have to be aware that if you're going to be trading short dated contracts, you might run into a problem like this. You might be absolutely correct, but run out of time on these options, and they melt pretty quickly, especially going into that last hour. So that's the difficult part. I mean, ultimately, from this breaker itself to the high, it netted about 43 points. 43 points on NASDAQ is good for about $860. I did not make $860 on this trade. But, once we left the breaker the second time, I did move my stop, but I was pretty aggressive with it. So immediately after we lost the bullish imbalance up at 74, I just took my stop out. So I ended up making about 12 points. So nothing really too crazy, but it just goes to show. I mean, your analysis can be totally on point, but if the time aspect to it doesn't correlate, then you might be in some trouble, especially when you're trading those options contracts, because zero DTEs, they don't have feelings. They will definitely eat up your contract, and they don't care whether you're right or wrong. But it is something that in the past I've dealt with, and I probably will deal with it in the future. But when you run into a setup that you really really like, and it's later on in the day, and it just takes a while, it is really discouraging when you eventually get the move right, but the contract just does not move the way that you would have expected. So that's just a painful past experience of mine. For a little while, I went into, because this was happening more often than not to me, I started going next day out. And, while it was okay, I just still noticed, like, look, if the move doesn't happen by the end of the day, like, I'm not holding it overnight. That's just me. I'm not one to hold really anything overnight at this point. Shares and stuff, to me, that's a completely different entity. Like, in terms of trading, I don't like to hold things overnight. The world is crazy. I'm not going to get caught up in something crazy that occurs overnight with any sort of substantial amount of money. Maybe a contract here and there, but I would still prefer not to do so. But that's, kind of just my take on that. The swing trading situation. I would just much rather scalp with, well or clear cut and well defined stop losses and such. But anyways, next up, I wanted to kind of get into this just a hair, because I think this will be something that everybody can take, whether you trade similar to me or not. But let me just zoom out really quickly, and I'm going to screen grab this. Now, this is the hourly chart. So in the group, this was something that I was talking about today because we looked at multiple different time frames, and ultimately, maybe others had different opinions than me, but here's the way I looked at it. So I'm posting it up. I'll throw it in the little chat bar right now. Here it is. Ready? This one, no, where is it? Hold on, it should be popping up right now. So here's the hourly, and again, being able to flip through multiple different time frames intraday, I think that's a skill in itself. Listen, sometimes you just kind of get distracted, or you're really focused in on one singular time frame, but at least having an idea of what kind of I guess ultimately, like, what your market structure, what your trend is on a higher time frame is very helpful, because this is a perfect example of that. At a certain point today, right, if we were looking at a very, very small range, particularly, let me get the exact time. When we took out the lows at about 11:20, you actually had a bearish market structure shift on a 5-minute chart, right? But if we were to go up higher in time frame, did we shift on the weekly? No. Did we shift on the daily? No. Did we shift on the hourly? No. Did we shift on the 30-minute? No. So none of our higher time frames that I personally keep an eye on, nothing had changed with them. So while you can, when you see that, 5-minute, market structure shift, or retracement into a bearish level on a specific, smaller time frame bearish setup, it's just nice to have an overall idea of where we are in terms of the higher time frame setup. So this exactly would prove that here. So at a certain point today, specifically 12 o'clock, when we started to knife like that, I'm sure a lot of people started to look short. But the difference here is, despite, we did end up dropping quite a bit. What was this, about 100, 130 points about? Look at the hourly right here, right? What is our current price swing? So from that low from the 7th to the high this morning, you'll notice that where did we retrace down to? That 50% or into discount, and almost immediately bounced from there. Did it take time? Yes, it took time, but that's when, to me, having multiple different time frames, specifically the higher time frames, those key levels on there, specifically your range mapped out, and just having an understanding of where you are in terms of the range. Now, if you got that move like we did this morning at 417, 417, let's zoom in here. And if you're looking at the 5 minute, so if you slide over one on the top bar and you click on it, you'll notice that right below that big red box, or big red bearish imbalance, you'll notice that we made a little bearish imbalance right there, and we got that wick right into it. And at that point, where are we on the hourly? We're still well up in premium, right? So that would be a situation where you can look short to get back into discount on a higher time frame, if that makes sense. And if I'm speaking crazy and nobody understands, just please, either drop a question, or you can raise your hand and I'll bring you up here and we can talk it out. But, ultimately, being able to map those ranges, that was a real distinguishing factor for me, because for a while I kept the same concepts, I wasn't doing that. And there would be instances where I would, I'd be taking short in a premium area, aka overpaying for my short. Now, when that specific situation happens, you might end up being right, but on the flip side of that, you might be too early, and that might be too much, and you might get stopped out as a result of that. So to cut down on those, that's why I love to just throw on the simple fibs. I'm not trading off the fibs. I'm looking for those imbalances in discount of the range. So, for example, if we are in a bearish market structure or bearish trend. How could I identify that? Look to my left. Were any highs or lows taken? Oh, a low was taken out. Okay, we have a bearish market structure. From there, from that high down to the newfound low, I would draw my fib and I would look for a retracement back above that 50%, because to me, that's at discount, right? If we look at a range at a scale of 100, if we're getting over 50%, we're risking less than 50% to make more than 50%. So that would be buying something at a discount in my book, right? But yeah, all right. What's up, Mr. Cotter? How's it going, man? Thanks for popping up.
Good, good. Thanks, Mando. I've been following you for a long time. Thank you for all you do.
I know
Uh,
talking. What's good?
yeah, man, I love your work. So this is my first time
Mhm.
actually really listening to you, and it's phenomenal, by the way. When you,
Thanks. Sorry,
so when you,
it's better to share the screen. Twitter needs something
I
like that,
know,
man.
well, they have that live thing where I don't like it as much, but the live streaming, it's not as an interactive.
Yeah,
So I understand what your concept is, right? Finding the overall sentiment or the theme, bearish, bullish, based upon bigger time frames, looking left. I love that. And I've been doing that a lot more the last year. It's been helping tremendously and flipping in between um, different time frames, which is awesome. So,
sure.
what do you mean by? And again, I'm sorry for my ignorance, but what do you mean by
No, you're
like bearish imbalance and discount? Yeah,
sure. Okay, yeah. So let's do this. I'm gonna pull up. I'll pull up an example. Actually, no, we have one up here. We'll use this one. So if you look up in that top bar right here, right, and that most recent picture that I added, it's the Nasdaq hourly, right? And again, the stuff that I use, you'll see it plays on anything. So if you're not somebody who trades the indices, that's okay. You can still use these concepts. It's all this,
I
to me,
trade the
it's all
spy a shit ton. Yeah,
okay. Good, yeah. So very similar action to Nasdaq. Even the reason why I pivoted towards Nasdaq more this year is just because to me it's been a little bit more of a leader than the S&P has. So it's, but when I do trade options, I'm trading SPX. So it's, I still have to have somewhat of an idea. And I've recently actually been slacking a little bit on my levels on it, so I haven't really been trading much of it. But anyways, so if we look at this range that you see, so my range, that swing low right after the seventh, right? You see that right before or right in between the 7 and the 12 right there.
yes.
So that last down close candle, that black candle, to me, that is the low that formed in which we took out multiple swing highs in that run higher, right? So if you look in between the 6 and the 12, you see that high was taken out. What was the price run to do it, right?
What do you mean by the
So
6 and the 12? I'm sorry.
the date and the time down there. You see how we have that high wick there?
Yeah, yep, yep. And
So
that's like right around 11:30.
yep, yep,
Okay,
yep. So taking out that high, to me, that's a bullish market structure shift. Market structure could have already been bullish, but this is just an extension or the next leg to a price run, right?
okay,
So that's why I have right in between, right when we make that move, I'm using that last candle prior to the move that actually takes out that swing high.
okay.
So that would be my range. And you might say, okay, well, I'm looking at it right now. And no, you don't. You have it way over to the right, right? But at the time, before any more additional information was added, my fib was actually right at the top, right where that price run ended, before we started to fizzle out towards the uh,
Yeah,
overnight of yesterday, right?
and that hourly candle had a huge wick, right? So it's hitting your fib up there, and then it's wicking way down, right, on the hourly. That's what
Oh,
you're
no.
looking at.
Yeah. So, no, but I'm still really on that first price run up, right?
Oh, okay,
Yeah.
I'm sorry. Okay,
No, good. So you see, like, at that situation, I would have my fib right at that high, right?
right.
Fact that we don't dip down into discount, right, or 50% or below in this bullish range, right? So think about it. If you're buying calls up here, right, and our range is set, you're technically overpaying for your calls in terms of
Gotcha,
the distance of the range, right? And you can
gotcha.
still be right, but the difference is, are you going to be right enough where you see that sucker go down into discount? Are you going to still hold on to it, or are you going to stop yourself out? So that's why I'm trying to be as precise as possible, especially trading a pretty leveraged vehicle like Nasdaq in a short time period. I'm trying to be as pinpoint as possible. That way, I'm not
Mm,
too many points. My stop outs don't wipe me out. I can get stopped out 3 times, and then one winning trade makes up for those stops plus more, right? So again, the initial high is set, and then you see that low wick 2 candles after that first high, right? We
sure.
to 50%, right? So to me, this range isn't set. And this is the difficult part about trying to nail those tops and bottoms because look, you might have a great inkling on what it could be, but to me, that range high or the range isn't set in general until we see some sort of imbalance to the downside, which I'll show you here in a second.
Okay.
So you see, now I'll move over to, a little bit later. This is right above that 2 o'clock candle on the 7th. So a little bit after 2 o'clock, you see, we actually make another high after that initial one at 11 o'clock. So from that point, I got my fib there. Now I want to see it go lower. Again, no bearish imbalance here is formed. So I'm not really looking short. I don't know if the range high is set or not, right? So I'm not going to be looking to short this in a bullish range. I'm just going to wait for a range high to set. And then once we get that imbalance to the downside, from that point, maybe I'll look to short it, or I'll just wait and look to long the discount bullish imbalance, right? So finally, after this, overnight action where we do kind of drift lower, we end up popping right back up overnight, right into market open, and we make a new high, taking out yesterday's high, right? So
Okay.
do I know if this range is set or not? I really still don't know, right? I need some sort of imbalance to show me that the range is set. We're going to go down to that 50%, right? Now, right after that 9 o'clock candle with that high wick or where that high fib is set, look at that next down close red candle right there.
Yeah, the big one, right?
Yeah.
Well,
You
yep.
see that down close candle right there? Yeah.
Yeah.
So specifically, if you look in between the green and the next black candle, right? Look at the wicks. You have the 11 o'clock wick coming up to a specific point. You have that green candle's low to a specific point. But inside that little red rectangle right there, that small little sliver of price range, which
Yes.
in this situation, I'll give you the exact numbers. It's only 2.5 points, but it's 372 to 369.50. To me, that's a bearish imbalance. So with price within that range, to me, it's imbalanced, or so imbalanced to the sell side, and there's an inefficiency on the buy side. So my expectation would be when price gets back up into that specific level, it's not going to be Swiss cheese and move right through that thing, no problem, right? So when I'm looking at a smaller time frame and this setup would occur, I would be looking for a short at that point down into discount, right? Now look a couple candles later, we get that wick right down into 50% of the range. If you slide over, you'll see it, right?
Oh, okay. I see what you're saying with the 50%. That's the 50%
Yep,
okay, yep, okay.
that 50%
And
return.
that's the discount.
Yep. So below 50%, because again, do I know the range is set until we get that touch of 50%? I not necessarily. What's a good little hint or clue that it could be the high? A bearish imbalance forming to the downside to get us back into that discount of the range. And from that discount of the range, then, ultimately I'm looking for that 15,417 high, which was my trade, the trade that I took at 2 o'clock. That was my target. Ultimately we didn't get there. We kind of stalled out for about an hour and a half, and B, um, we ran out of time on the day. Really, I mean, market closed, and while we did run up, it was not nearly enough to go up and get that high. So ultimately, like using the higher time frame to kind of steer me. So for about 2 weeks now, I've been pretty bullish, and I the way I say bullish might be different from a lot of other people. I think people are thinking of like, oh, everything is fine and dandy. Like markets looks great. I'm going to be looking to long term invest here. Like that's not the way I'm looking at it in a bullish sense. I'm looking at it from a bullish sense, like price can move higher here because to me, I feel accustomed with how the algorithm is moving and delivering price. We don't always just go down in one direction, whether it's bullish or bearish. This is not how it works. So, again, I kind of talked about it a little bit before, but, there were a bunch of factors that kind of led me into having a bullish bias up until this point. And it's going to, there's a couple factors that I'm going to shift when we get to that 15,468 daily swing high. Because to me, although we would be shifting market structure bullish by taking out that high, one, we're sweeping liquidity on a higher time frame. B, there's a bearish imbalance there on the daily that I think we get into and reject. And from there, I'd be looking for that discount bullish imbalance to go long again.
Right,
right?
so when it hits that when that big wick that comes down to 50%, that's where you would be looking to grab some calls, let's say, or go long.
Right.
And okay, what was my other question? All right, so when you so this chart here, you have like 8 to 12 to 9 to 12. So these are hourlies during market open, right? I'm
Oh,
assuming
yeah, yeah, this is hourly, yep.
for
These have the overnight, candles as well. I personally like using, well, I really do all of my indices charting on futures. I think there's a huge benefit to it because, rather than on SPX or SPY or Qs or IWM, whatever you're looking at, you're gonna get gaps in that overnight session where, with futures, you really only have 1 hour from 5 PM Eastern to 6 PM Eastern for any gap to really, come through. Uh,
Mhm.
Otherwise, there's the other places in the world, it's prime time for them to be trading and stuff, and it's not like they don't look towards our assets or anything like that. So there are levels that form overnight, and a perfect example of this would be if you're trading SPX and you get a gap down in the morning, say it's about 15 points, and you're looking to short that gap when we get up into that gap, right?
Mhm.
you know,
Right.
while it could still work out, and it likely, could, um, you're risking 15 points in that situation. That could be a lot of money, depending on, sizing and everything like that. But if we're looking at futures, maybe that imbalance that we're going to specifically target, maybe it's only, 5 points. So you're letting that, the price get a little bit deeper into the gap prior to, going in on that short. That way you limit your risk, and you're also increasing how much money you're going to make if you're right. So to me, like, risk reward wise, it's giving you a little bit more of a tighter parameter for the trade, so that your risk might not be as much, in that specific situation. So I'm a huge advocate for charting on futures. I think the, whatever it is, live data is like $4, but, um, to me, it's like, if you're going to trade the indices, I think it's very helpful to have specific overnight levels rather than just gaps.
Okay. Can I ask
Yep.
you one last question?
Yeah. Ask me as many as possible, unless
Okay.
something jumps
So
out at me
so
about it.
if you went long on that wick down to the 50% discount level, and I know these are hourly time frames, but like where would your in given the scenario that we have the history here, right? Because it's all
Right.
laid out for us because this already happened.
Right.
Where would be your kind of price target?
Sure.
Looking left and then based on where you got in.
Yeah. So I just want to, like, just to be specific, this particular situation, I did not long this low wick into 50%. Now,
Okay.
and the I have a reason for it. While, again, look, we look back in hindsight, it's clear as day. Oh wow, look,
Right.
strong wick off 50%, right? I have an added layer of confirmation that kind of needs to be met for me to, like, really take action on something like this, and I need a bullish imbalance. So if you look below and you see those two green boxes, the one in this situation I was specifically targeting, and I don't know if it, hold on, I might have it on the 5-minute chart over here. You might even see there's a little alarm clock. I had my alert set for that imbalance specifically at 62%. While, again, I've seen the fibs play out like this, and it works. To me, I need that extra layer of confidence, and that comes from getting an imbalance down there in that specific discount range.
Right.
In this particular situation, can I justify this move? Absolutely. Did we get into discount of the range? Yes. Did we hold previous resistance as support? Right, this big red box that we're in currently, we did hold that. Right, we came back in and closed, on the hourly chart. So
Hmm.
this would be an instance where, let's say, and here's my target. My target is that swing high, um, specifically. So, I'm not too greedy. I'm not looking for any specific extrapolation through the high of the range or anything like that in particular. Like, look, my target still, again, it's 15,460. Is it likely for that to happen in this specific price run? Maybe, maybe not. So, for me, realistically, the target is that high. Now, if we were to get to that high, rather than me have my, take profit, the little level that I have. And if you guys have watched any of the videos that I make, you'll notice that, I do have, a take profit, and I have that stop that moves. I think that's really beneficial as well. But I'll have my stop up there, but as price is getting up there and approaching it, I'm actually moving it higher. So you'll notice in pretty much every video that I record, I'm usually getting stopped out of my trades in profit, right? As I'm trailing the stop, because, again, do I necessarily know what the high is going to be in that situation? I can come to a little bit of a conclusion, but do I know for certain? No, not necessarily. So rather than me just take profit at that initial move, and let's say we do get that move to, 15.468, I'm missing out on 50 points, man. You know what I mean? And that sucks. You'll kick
Yeah,
that.
right. Because that's a
So
100-point move right there, right?
it's
I mean, from that
the
big
beauty,
wick down up to that
right?
that previous high, the bodies of the candle, not the wicks, right?
And that's the beauty of it, man. The way that I see this and the way that it look, we're coming down into a specific range. And again, if we're going to take the range and we're going to just, make it out of 100, if we can take a majority of the range while risking obviously less than a majority of the range, to me that's solid. I'll take my odds there. Now let's say, in this particular situation, if we look, obviously again, I wasn't looking towards 50% for that bounce. I was looking a little deeper into that 0.62. But let's say it got into the 0.62 and I'm in the trade and I'm thinking, okay, here's my trade plan, I guess. So for me in this particular situation, I'd be entering off the high of that green imbalance, my stop loss just below, and I'd have my target set at that 15,417. If price is to fall below that green imbalance, I stop out. My risk is defined. I'm not going to get caught in quicksand and say, "Oh, well, we got one more down there below. Maybe I'll wait for it to get down there." That could be $600 in one contract of Nasdaq that I'm just
Yeah, right.
kind
Right.
of up to chance. I would much rather take the loss. We'll come back later. We'll look and see how price reacts to that one. That's typically how I play it. Now, there is a way where you can play it and play it with a little more safety, and this is something that I started to do towards the end of August. So I don't know if you were trading much in August, but August was kind of a shit month. It was really sloppy with
Yeah,
a
no,
lot
I
of
was here.
all
Yeah.
over the place. So towards the end of August, I knew I had to adjust. So rather than just having my orders set at specific points, I would actually be waiting for price to show me that it actually wanted to leave one of these specific levels that I have mapped out. Do I miss out on a couple points doing that? Absolutely. But in terms of confidence, it is definitely uplifting when you're seeing price leave. It's showing you, yes, I'm going higher or going lower, whatever it might be. And you know, it's almost like not jumping the gun in a sense, right? Whereas I have my order set. Let's say we just get a really aggressive wick down, I could be getting stopped out within seconds, and it's happened before, and it sucks. But to be on the safer side of things, you could also just watch price get into it, and as you see it lifting up and out of it, wait for that confirmation for it to leave. You can do that as well. You
Okay. And with your fibs here, how often do you update that on a trading day or trading week?
Oh,
For like, when
yeah, it's every price swing. So every new price
okay.
happens.
You're constantly updating it, right?
Yeah. So on the 5 minute, it happens every time a swing high or swing low is taken out. Same thing
Okay.
goes for here on the hourly. Obviously, with the hourly, it might take a little more time for it to happen, but immediately, let's say tomorrow we open up and we take out that 417. My new fibs would be from that low wick at that 50% up to whatever the high is, and if that high is just continuing to churn higher, I'm going to continuously drag the high of the fib with it. And then what's going to indicate to me that we have a range set? I'm looking for some sort of imbalance down, right? Where we create that little gap in within the candle. Um, and from there, I've started to incorporate this a little more where I'm actually looking to short it down in a bullish range down into discount. Because I know that, sometimes these ranges are really big and you can score a decent amount of points on just those retracements. So I started to do that a little more than I had in the past. But realistically, in the past, in the video that I have up there on YouTube, it's straight up me waiting for those retracements into discount, and that's really the only trade that I'd be taking.
Right, right. Well, thank you for all that, man. I don't want to take over the whole conversation. This was phenomenal. I could ask you questions for 4 hours. So
No, man,
I'll,
you
I'll,
want to
I'll,
you want to stay up here? Yeah, no, if
this
you
is,
want to stay up here and keep
yeah, I'll
listening.
stay up here and keep on listening. If anybody else wants to join in, if not, I will too.
Yeah, no. So if anybody else has questions, feel free to pop up. We can get after it. I'm just gonna go through here and see if there's any comments or something. I saw somebody asked me one. Where is it? Yep, we still need to sweep high. Yeah, I'm still waiting on that. Um, let's see. I know. I forget his name now. Shoot. Um, where is he? He had asked me a question. I'm sliding by it. Shoot. It's somewhere on here. I'll find it.
Is it the one that says, "So you're in your experience when you're day trading, what is the time frame that is best for your imbalance?"
Uh, yeah.
No.
So I'm like I said, like if I was to show you my layout in itself, I do have like quite a few charts up. So I have really the one that I'm eyeballing, for the majority of the time is my 5 minute. Um, then I have a separate 5 minute chart, which has really turned more into an hourly, but that one is for DXY. So the dollar index, I keep that on a separate chart and I keep an eye on that as well. In a perfect world, they're inversing each other. And you'll notice that when they are moving together, I refer to that as someone's lying. And usually PA is pretty crap when that happens. So I kind of try to avoid that trading in those times when they're moving together. That's sloppy, and you'll notice that that typically leads to less imbalances being formed. And if less imbalances are being formed, that's less trades that I'm really looking to even take. But then I have a 30-minute time frame. I have an hourly time frame, daily, weekly. Which weekly, am I looking at it that all that much intraday? No, not necessarily. Daily, not necessarily. If we're approaching a key swing high or low, absolutely I'll have that in the back of my mind, at least to have an idea. But I've started to actually put those hourly swing highs and lows on my 5 minute chart, and I just annotate them in like a pink line rather than the blue, because one thing with the higher time frame is you'll notice that when's a good time for a retracement versus when's a good time for a reversal. And through back testing it and obviously learning from others, typically when we've taken at higher time frame liquidity, that's a pretty good time for a reversal. And we actually had that today, off of yesterday's high. Right, you might think of it, well, Mando, that was only like 8 hours ago, right? Is it really a higher time frame high? Well, is it painting on the higher time frame? Yeah, it painted on the daily chart, right? That high is painting on the daily chart. For us to sweep that, we're still technically sweeping a higher time frame high. And you know, since we did that, really, what did we drop? 130 points after taking out that high. So those are the particular instances where I don't necessarily look to play that, Mando model that I've shown and talk about. In that situation, I'm actually looking for a reversal. So I would look for something like we got today at, what is that, 10:10, where we created that imbalance to the downside. We were retested immediately and rejected, and that really started that downfall lower. Um, but yeah, no, the 5 minute, and one addition to that really is when I'm trading, I look for the trade setups really on the 5 minute. If I'm looking for trades on anything lower than the 5 minute, usually they're not as successful. I think the 1 minute chart, while it can be helpful, you could totally get spooked by some of the quick wicks on there, and the speed of it is going to kind of uh, I don't want to say get you to panic. I don't really panic much, but like you're gonna see it move fast, and you're gonna think, "Oh, I'm wrong. I'm wrong immediately." When that's not always the case. It's the speed of it. It comes second to really the specific level that's been created, in my opinion. So, um, but oh, I'm sorry. Additionally, in that when I'm taking the trade off of the 5 minute, say, I do actually go down into a 1 minute and I'll spot some 1 minute imbalances. So I know that, especially if I'm in profit, I know where I can move my stops in profit. So even if the trade goes to shit, I'm going to be able to move that thing up and at least make something out of, really nothing, right? So that's really kind of just the thought process behind me going down into smaller time frames as well. I don't try and look for trades on there. I've done it in the past, and I think if I had to give some sort of number, I would say that the success rate on those is much lower than taking trades off a higher time frame. If that helps.
Man, no, I have another question that's, if you don't mind.
No, please,
So
please,
I'm
man.
So I've been going at this about 3.5, 4 years, and it's really starting to come together for on many different levels. It's been more of a personal growth experience than anything else,
Big time, big time.
right? So the I'm doing like a 1K challenge with a bunch of friends on here, and it's a cash account, and I just do options anyway, so it's like right in my wheelhouse. But it's a 1K challenge. We're gonna see where we end up at the end of the year.
Sweet.
So obviously you have limited buying power throughout the day, right? And you have to which is great because it makes you more disciplined. Um, any advice? And this might be a little off topic than what you're teaching. If you want, we
No,
could table it. But
please, no.
okay, so what would it like for example today? I'll just give you a real world example. So I took Tesla calls on the dip. It dipped further. I had a stop loss, a mental stop loss. It bounced off of that, held a little bit. I added a few. And like you said today, like it just took all day today.
Mm,
Right. So I think I ended up closing it out with a 12% win. I ended up having four options. And but that was like 85% of my buying power for today. And I know this is a long game, it's not a race to the finish line. So, like, is there any advice? And I just gave you that to kind of give you a little background, like what I went through today, which was great. It was a win. It was the only trade I made all day. But any advice as far as like, because like what you guys, what I do with my other account, with you do with your account, I'm sure you have some margin, you have unlimited buying power. You could just really, hey, this is not working. Let me cut it. This is working. Let me take some profit. Let some runners run. You know what I'm trying to get at, right?
sure,
Like,
yeah.
how do you manage that?
Yeah, so this is actually good because this leads into, um it's something that I think is completely underrated. But the time of day that you're actually looking to trade to me is probably the most important thing, right? I don't even get to the computer until 10 o'clock in the morning. So the realistically, the times that I'm like hawking and I'm looking very closely for potential setups and stuff like that, 10 to 11 Eastern and 2 to 3 Eastern. Trading in between those times, do setups occur? Absolutely. I'm sure people make tons of money at other times throughout. But through experience, through again, from what I've learned, those times, for whatever reason it is, I don't know if it's a hot time for multiple different markets that are overlapping, or what it could possibly be, or maybe settlement times for specific clearinghouses or whatever it might be. But 10 to 11 and 2 to 3, if we go back, if I wish I was sharing my screen, because we can go back literally
And look at the
however
moves.
long and just look at, yeah, the moves that occur during that time period, and how well they line up with the time aspect of it. It's really amazing. And it was never something that I would ever consider as a, I don't even want to say really a strategy, but it's something that you can incorporate. But you think about it. What's the one time of the day, really, or two times of the day that everybody, or no, I should say three times a day that everybody talks about is 9:30 open, how volatile it is, this and that. I went through weird phases with open over the time I've been trading. Initially, I actually used to kill it off that open, and then just what I was doing was just not working anymore, and I started doing poorly off of open. And starting off the day with a poor first trade, that kind of hurts mentally, especially if you go down a little bit and you're trying to fight upstream versus taking a you might not wait for that A+ setup at that point, and you might just want to just get into whatever you can to try and chip away at what you lost off that 9:30. So to me, that volatility, yeah, it might be good on individual names, maybe even like Aspire, QQQ. Doing that on something like Nasdaq, SPX, or ES, it's not for me. It's way too volatile. Every point really does matter when you're trading these, because the monetary value associated per point is pretty high. So I just prefer to avoid it. But that's one time that everybody talks about. Oh, what's your opening strategy, right? Mine, I go to sleep. I'll wake up at 10 o'clock. Then everybody talks about lunch, how it gets slow and it's choppy and it's boring during that time, right? You don't really look towards anything, believe it or not. Just again from sitting at the computer all day every day looking at what we've got since July. I'm using July specifically because this is when I started to notice it a little bit. But we're actually getting pretty good moves starting in the lunch hour, and again, they're not the speedy ones that everyone's expecting. But a lot of the time, especially as of late over the last 4 or 5 months, we've actually been getting some decent moves throughout the lunch session. So am I looking for trades during that time? Not necessarily, but if something will, smack me in the back of the head, like specifically today, I was looking for a little bit deeper on that hourly, so I wanted it to go a little bit lower. And if that was to happen, I probably would have taken a trade in between that, 12 to 1:30 time period. And then obviously the last one everybody talks about is power hour, 3 to 4. Some days great, others not so much. Today we did get a little bit of a run up, but I don't know. It was just kind of like a poison idea early on where, oh, you can get contracts for 40 cents and you have a chance at making X amount of money on them in, 20 minutes. Holy shit, that's crazy. To me, it's like, again, from personal experience, I would just lose more often than win, slapping those end of day trades. And, sometimes when they work, when they're great, it's awesome. And then when you're just sometimes burning out whatever little bit of money. But um, I don't know, man. I think time frame is huge because that time frame, typically that trade, specifically for me when I'm targeting that silver bullet, I'm looking for 20 points. So if you can nail a pretty substantial move within that hour, that might set you up nicely, and that way you can be even more particular later on when you're trading with, a smaller account. So that way, you don't burn it early, and later on you got nothing to work with, and kind of pad your stats a little bit. But you know, again today, Nasdaq, perfect example. 1010 it was, the imbalance that was tested at 1010 rejected, and it ended up melting down like 70 points. So those happen, and more often than not, again, you're going to see 10 to 11, 2 to 3. And if you don't believe me, just back test it. You'll
Well, I
notice.
just looked at the last 4 days, and 3 out of the 4 days, 10 to 11 was a nice move.
I don't know what it is, man. Again, I'm a firm believer that there is some sort of, algorithm that delivers price, and I say that because, again, I'm not trying to like gas myself up or anything like that, or the concepts really. I'm not trying to do any of that. But for every move that occurs on the chart, I should be able to have some sort of justification as to why it happened. And if I don't have that, then that's problematic. But
Well, maybe it's
more
smarter money like yourself that's getting in at that time too and moving the
Yeah,
needle. Yeah.
right. So like more often than not, I just want to be able to like, okay, look, even if my trade doesn't work out, I personally needed to know why. And when I was trading using a lot of, other, I don't want to, I'm not trying to talk trash about however anybody else trades or anything like that. But me personally, I needed to like have some sort of understanding as to why, and it had to make sense, because if it didn't make sense, oh, we had a fake breakout. Okay, so you're expecting me to drop, 10K on a contract that is going, or on a options contract that's going to fake breakout? Are you kidding me? And that's the best explanation you can give me? That shit drove me crazy. I needed more than that, and that's when I started to pivot more towards just reading price strictly. And you see on the charts, I don't have any indicators or moving averages, volume, none of that.
Yeah, I
I don't.
kinda love that.
Yeah, necessary at all. I think you can really justify, every move that occurs again. And I mean, look, I challenge people to do it. I say, yo, look, go to any chart where a move immediately happens, and I can give you a justification. If you want to believe my justification or not, that's fine. That's up to you to decipher. But I can give you, some sort of background and how it fits the ideology that I subscribe to. And I need that, dude. When I don't have that, and I'm just like, yo, I'm stumped right now. I don't know what's going on. That's like a huge problem to me, because that's gonna eat me up both, mentally intraday, but it's also probably gonna keep me up late at night and just trying to figure out what the hell went on.
Yes, yeah, so time thank you for all that, and there's a lot of
I
little nuggets in there.
and also
Um,
check this.
Good.
Hold I'm also gonna show you this because I did chart Tesla already. I'm just gonna make sure that it's the right one. I think it's right here. Oh no, it's right here. Good. Okay. I'm actually gonna post Tesla and I'll pin it to the chat, and I'll just show you like, again, like, this is my model. While it didn't complete to, completion, the move was pretty substantial off of the area that I would be, specifically targeting to play out. So let me just post this up here in the top part of the chat, and you'll see it right there. So you could see where I have that one fib right on the low prior to taking out the swing high. That was what, 3 candles to the left, right? So we had a bullish market structure shift, in my opinion. You see, we had that, rejection off of that 30-minute bearish imbalance right there. that red rectangle. And if you look
The
at that,
oh, there
look,
it is.
wicked into it and puked. That's what I would, off the first attempt. That's what I'm, anticipating happening when these imbalances form, when we're on side. So a bearish imbalance forming in a bearish range. That's the type of move that I would expect to happen after. Um, but you could see, look, and you might say, oh, well, you didn't have your fib at the top of that first little run up. Like we dipped after that first run up. Well, to me, the range isn't set because again, we hadn't made that retracement back into 50% yet. So I gotta wait. And there was no imbalance formed either. So finally, you see we get that high wick, and I think this was this morning. Yeah, it was 9:30, 9 o'clock candle or whatever. But we get up into there, we set the range. And why do I know that that would be a range setter? Look at the bearish imbalance that forms, that new rectangle there. Price dips down into where? Bullish imbalance, that green box right off that 70% fib. So right in the golden pocket. Price gets into that. And look how beautifully that thing respects. Bounce the first time. Where does it reject? The midpoint of your bearish imbalance on the 30. There's another rejection. We sweep the low, still holding on to that bearish imbalance. So this is what we would call like a turtle soup. There's your turtle soup. Sweep that low, gather more liquidity for that next move higher, create multiple imbalances, and we move higher. So just catching something off of that, I mean, dude, that's a decent amount of coin. I mean, what is
Yeah,
the
yeah.
exact number? I mean, yeah, it's
If
about
I
four,
had this up
four
on
bucks.
my chart today, I would have I would have done a lot better, right?
Like $4 on Tesla, and
Yeah,
what contracts are going to be paying you. And look, and this is actually something that I think is really important for everybody to note. Like, if I'm looking at a 30-minute time frame and I'm, you know, and I'm trying to, I would see a setup off of that. I would go into that trade understanding that this trade setup might not take 5, 10, an hour, 2 hours. It might take a little longer just based on what time frame.
mhm,
So if I'm looking at a weekly time frame, I'm looking like far out, like in terms of, how long I think this move could take to play out. Daily, a little bit smaller, but still, it could take some time for it to actually work out. Hourly, a little bit tighter, but still probably not a zero DTE idea, right? 30-minute even, maybe in the morning you look towards something like that. I think Teddy smacked PayPal this morning for quite a bit, and that was he was using 30 minutes, but it wasn't a zero DTE, but still. um but really, the contract is, to me, it has to have some sort of correlation to the time frame you're trading on, because if you're looking at a weekly chart and you're trading a zero DTE, like, good luck. It could take way too much time for that thing to play out prior to your contract's going to be devastated as a result of that.
right. Thank you for that. And then when trading the indices or like or whatever, actually for that matter, do you try to look out for like do you kind of try to determine is this a trend day or is this a chop day?
Yeah, so that's a very difficult thing, in which I actually think, over, I would say even like the last 6 months, I think I've improved immensely at the trend days. And the reason why I say that is because I don't know, maybe it's a personal thing, but I'm always one, and I know there's a lot of other people specifically in this space right now who I know. They also, you always kind of just want to fade popular consensus, right? You see people on Twitter tweeting it like, oh, everybody's bearish, so I'm bullish, right? There are people who just want to, kind of fade popular sentiment, and I'm totally one of those people. But on the flip side of that, the way that I've kind of combated that in a sense is, again, having those higher time frame levels, right? When we get those trend days, it's typically because there's a substantial amount of space prior to our next higher time frame level, that, as much as we may want to take the short, there's no real reason to justify us switching up on something that, let's say we're up 100 points on Nasdaq or something. We might think it's overextended, but is overextended really a justifiable term to use? Like, where's the backing to it? We had this conversation the other day, actually, because we had a few people who were saying, "Oh yeah, we're so overextended," puts, right? And then, the way that I say it, and look, you could have all the justification in the world, and whether I agree with you or not, who cares, right? Like, you shouldn't really look towards anybody else to give you any sort of direction. In my opinion, it should really be a you versus you thing. But, you know, as somebody who's, sparking conversation, if somebody were to say that to me, I would just say like, is like, why, right? And I'm not trying to be a jerk when I say that, but I'm just like, why? And then, some people will be like, well, we went up a lot in a little bit of time, and I'm like, okay, so like, where's the
The
data,
logic, even as a novice trader, I laugh at that. Like,
right?
those general statements like, "Oh, it's up so much, it's gotta come down." No, it doesn't.
Yeah, no, exactly. No, it doesn't. And those are typically the ones that people get smoked on, right? So like, that's the thing. And it's like, I don't know, maybe I'm a wacko and crazy, but I need some sort of justification, right? But if somebody said it's overextended and I'm like, why? And they say, okay, well, I use this, and we're way out of the Bollinger Band, or we're way doing this. At least you have some sort of justification. Whether I agree with you or not, who cares? Who
Yeah,
cares about my
you're looking at technicals, and you're an
right?
engineer of sorts, right? So it's like, give me the engineer logic, why?
Yes, and I needed that, bro. I'm telling you, through all this time doing this crap, right? For years and years now, I I went through every step of the way, every model you can name it. I've tried everything, and I was still actually making money. Like, I was doing just fine. But the difference was, one, I was using way too much money that I should not have done, because the swings in price in my account were just way too big. Have a huge day, and then throughout the rest of the week I'd melt it. Almost all of it away. I'd still be able to take out some, but not anything nearly where I should have. Right. So I almost referred to myself, and Katie's in the chat right now. He'll laugh at this, but it was almost like a cowboy. Like, I would just, I would take shots all over the place. And I think it was obviously a level of maturity that had to come in and kick in at some point. But I needed that next level data or logic as to why something may or may not happen. And I just didn't think I was getting it as much from using anything other than just reading price as it's, as a whole, I guess you could say. Like, I just couldn't keep going on thinking, oh wow, well, if this bull flag fails, like, I'm fucked. I couldn't do it. I needed to know why it would work, why it wouldn't work, why the cup and handle would work, why it wouldn't work. And now I think, with all of that, I can give you a perfectly justifiable reason as to why a cup and handle would work, why a cup and handle wouldn't work, why a bull flag would work, why it wouldn't work. And all of those, you name it, there's a million of them. Double bottom, double top, those things drive me crazy, because while I think, if used properly, they're they're great. They line up with a lot of the stuff that I'm doing as well. But I think whoever's teaching them nowadays is doing a really poor job, because there are certain staples that you need in order for a double bottom to work. There are certain staples you need for a cup and handle to work. There's certain staples you need for a bull flag or bear flag to work. And again, I just don't think people understand that, because to me, when we have relative equal lows, and that second low that sets doesn't take liquidity or go below the first low, that means something completely different than if that second low actually does go below the first low. To me, that's what a double bottom would be. We take liquidity, and that's when we're looking for the reversal. If we have equal lows, I want you guys to check this out. And if you guys are watching the market, you don't have to. I would say definitely just back test it, check it out. But when we see perfectly clean bottoms, like to the exact point or even close, but that second low doesn't take out the previous low, you'll notice that oftentimes we're coming back down for it, and we're coming back down hot to take out that quote unquote double bottom. That's a double the draw of liquidity in my book, and that can create explosive reversals. So again, there's so many little caveats and little things and criteria that need to be met for these specific things that everybody on Twitter wants to talk about.
Mm,
Um, but to have that knowledge of them, I needed that, and I didn't have it. And now I think I do, just from studying price as a whole. And that's to me, I think, really the difference.
thank you so much.
Yeah, no, man, you got it. I know I'm rambling on, but
No, this is good. One
yeah,
last question. Liquidity grabs. I
yeah,
understand the
yeah,
concept, but I don't really understand it. Like, so, like when
nice.
it breaks out to the upside and it gets, grabs liquidity and comes back down, or breaks below support and grabs liquidity and comes back up. What's the real, I don't understand I understand it, like, kind of understand, but how does that then affect the price?
Sure. Yeah. So let's use Tesla as an example here. right? So let's look over at, all right, we can use it as an example here. So look over at that in between 7 and 8, that 12 o'clock, right? And you see that high. It's a little after the 12. It's about in between the 12 and the 8, actually, right? So at the time of that, that was our swing high, right? So, um, from that point, just using basic logic, you would say, okay, what had to have happened for that to be the high in that situation, right? I know we ran into a level, but beyond that, um, people had to have had interest to the downside, or people had to have like considered shorting this, right? If prices just stopped dead in its tracks, right, there had to be some sort of shift, right? So when, whether it be hedge funds, institutions, big money traders, people that can actually move markets and not just, you and I, or,
Mm.
I don't know, you might be the high roller who can move markets.
No, 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 no.
Personally, I'm not moving Tesla. So, but you know, they're not going into this trade without any sort of risk management, right? They're going to have stop losses, and the idea behind it is those orders are going to be resting above that high, right? So that when price reaches back up into that area, right, price is going to reach up, grab that liquidity or stop hunt, take out stop losses. And all that's doing in the process is just generating liquidity, aka money, for price to be able to redirect and move somewhere else, right? That ultimately is the concept of it. To me, again, I've had many conversations about this with a lot of different people, and to me, volume is pretty irrelevant. I To me, everything that is needed and necessary to move price on specifically these large cap options, indices, crypto, anything, all the liquidity necessary is on the chart, and that's why I'm pretty adamant on why I believe that there is an algorithm that delivers price. And is it one? Is it multiple? I wish I knew, but what I would tell you is, if you go on to any daily chart and you look at a previous daily swing low, and when price takes out that swing low, look what happens. And I'll leave it at that. That is a higher time frame liquidity sweep, and typically those lead to reversals. So essentially, it's gathering liquidity or funds, money, in order to redirect price in whichever direction
Dude,
is.
I'm look. It's for some reason I just have Coinbase up, and I because I saw that Bitcoin was ripping tonight, and I'm looking at the 1 hour chart, and you're exactly right. So anytime that swing low happens, there's a lot of volume, and it reverses.
Yes, so that's the thing, and actually, in a group
Holy shit!
we got a little testy about it because, and look, again, I'm not saying that I know everything. This is it all. Everything is has to come from me. It's not the case. If what you're using works, great. Don't worry about what I'm doing. Right? It doesn't matter. But just in terms of explanation, being able to explain it with facts, data, and analysis behind it. This is something that's very noticeable, that when swing lows are taken out, specifically on the higher time frame, that's when we get that reversal. So what would make sense there is when that swing low is taken out, those old orders that sent price from that initial point, because if it's a swing low, price had to have moved higher from that point. So those who went long there, their orders are resting below that swing low, which is aka money. So and when you're buying, shares, not options contracts, futures contracts, when you're going long or buying, right? What is your stop loss going to be? It's going to be the inverse of that. So when price comes back down, it's selling those longs as shorts, right, essentially. And that's just creating funds, right, unused funds that the market can use then to create other moves. And that's why I for one believe that price is driving really everything, and volume as a byproduct of price sweeping previous lows, generating money, and that's where the liquidity is coming from. I just don't believe that people are sitting at the desk all day long and pressing buttons at specific times. I really do
Right.
algorithmically driven, and I think small sample size, but I personally know someone who used to be a floor trader, 2011, came and he was out, and I said, like, what happened, because I'm curious about this. And he said they just went all to computers. I'm not necessary there anymore. So and then if you look, it'll say like 60 to 75% of all trading is algorithmically driven, and I would argue it's even more. the one caveat to everything that I've just said previously, and one that I'm not totally sold on yet, is still small caps or penny stocks. I think due to their illiquid nature and the liquidity not, technically being on the chart, I think that's why people get arrested for pumping them and shit, because that excess volume that they are bringing actually can move price. You don't hear many people getting arrested for pumping Tesla or
No, right,
that. It's, maybe the options contracts, because you can do that, and I know of people who on here who do that, but uh,
right.
you know uh, to me, it's all the necessary liquidity that's needed to actually move prices already there. And we see it every time. Like I said, go to a daily chart, go to an hourly chart, don't matter. If you're going to a higher time frame and you see that price is swept there, typically that will
Yeah,
create that reversal.
no, exactly, and I'm looking at a handful of charts now on the hourly, the 4-hour, and seeing that sweep. The sweep,
Yep.
looking retrospectively, it's very obvious, right?
Right.
So if you get that, let's say you zoom in on a 5, 10 minute, 15 minute, and you see that sweep down to maybe a support area, that's where a good entry may be, because if it holds that support, it could be that liquidity grab for the next move to the up, for example, or down, for example.
Exactly.
So,
Yep.
dude, you just blew my mind with that right there. Okay, so this is really good. Thank you so much.
Yeah.
I'm gonna shut the frig up. This has been
No, you're
awesome.
I'm gonna extrapolate on that a little bit. So if you slide over on that top bar, I know I posted a lot of charts up there, but
Which one do you want me to look at?
yeah, if you look at the tweet that says I like this low a lot, golden pocket, blah blah blah. So
Hold on
there
a
were
second. I like this low.
multiple, there are actually multiple instances where, in this process here, we've swept lows. So for example, right before September, you see that low that was made. If we look left and we,
I don't know what chart you're looking at. I'm sorry, dude.
all right, yeah. So just go over. I'm actually gonna let me do this. I'm gonna delete the other ones just for now,
Okay.
and I'll
Oh, I
bring
like
that.
this a lot. I like this low a
Yeah,
lot. Yeah.
good.
Okay.
See,
Yep.
I'm gonna get rid of these, and then we'll go back to
This is gold right here, brother.
right here. Hold on. We're not deleting now. Our Okay. It should be at the front now, or maybe two over. I like this low a lot. It's from
Yep.
October 26th.
Yep.
Yeah. So even if you just click on that one, and
Yep.
um,
I'm there.
with hindsight, it's easy. That's why I put it in writing on Twitter, because
Right.
I did it before.
And this
But
is a 1 day chart, right?
yeah, so this is the daily on Nasdaq. Again, these concepts, they're going to work on whatever else. Doesn't necessarily matter. But if we look at that September low just before September, and you say, okay, why would price bounce there? Like, what lines up? If you look left, did we take out a higher time frame swing low? If you look, I think it's right just before July. That little, I guess, what do you call it? A tweezer bottom. That little candle right there.
Yes.
Up that low, and look what happened. We took off, right? Also, if we look left even more, you'll see. I mean, it's a little bit tougher to just explain without showing you,
Well,
but
I could see the tweezer top.
yeah, yeah,
Yeah, middle of or May or whatever it was, June probably. That's probably June. Right.
right.
Okay.
So if you
Yep.
look right above that purple, um, it's like literally directly above that purple little arrow thing on the bottom, right before
Yes.
July. If you look
Hmm.
there, you'll see a wick, a body, and another wick, and in between there's a bullish imbalance too. So not only did we sweep liquidity, but we did get into a bullish imbalance there, right? Now, is that a situation where I would expect a reversal back to the highs? No. Why not? Well, we didn't get into discount yet, right? On that low that we made prior to September, we didn't get there, right? While we did bounce, it wasn't enough to take us back up to those, I don't even think it's all time highs, just yearly highs, right? So then price gets into another bearish imbalance and we move lower. And then this low that occurred in between that purple arrow and that purple lightning bolt, you see price kind of got sticky right off 50% of the range right there, right? Did we take out a higher time frame swing low before that? Yeah, we did. We took out multiple actually. So we took out the one
Hmm.
in September, and then if you look all the way back over, probably about June. So before July, we have multiple lows there as well. Swept those, and then we run up higher again, and that was right off 50%. Right now, price retraces back up, and this is October 12th. I know it because we were on live for it, but price gets into that daily bearish imbalance up there at 15,468.
Yep.
We reject, we melt down, and we get down into obviously the low on this chart, which was 1,300 points ago. Or no, it wasn't. It was about, yeah, actually about 1,300 points ago. Yeah. So we get into that bullish imbalance down there in that 62 to 79% retracement area. you'll see that little red line that I have, 14173. If you slide on over, you'll notice that not only is it 50% of the bullish volume imbalance, aka gap up, but it was also a swing low. Look, we barely swept it. Boom. And since then, right now, we're currently almost back up at that 15,468 high.
Wow.
See what
Very
I'm saying?
cool.
So
Yeah.
crazy, bro. Like that concept, and I actually tweeted about it today because that is something where, to me, it's almost, I don't want to say a cheat code, but it is so helpful when you feel like you know where price is going before it happens. Obviously, does it mean you're always going to be right? Does it always mean you're going to make excellent trades? No, because execution's still a part of it. But having that little extra layer of confidence that you know where price is going to go, what is your likely draw in that situation? It's a beautiful thing, you
You
know?
could do like a month session on this subject alone with back testing and analyzing. It's
I know
crazy.
we do, man. Yeah. So like, again, like, so that's just one, I guess, overall concept. And typically, like, the trades that I take aren't the exact liquidity sweep. So we actually have a dude in the group. His name is Ryan, and he's like insane when it comes to like liquidity. So I kind of showed you the walkthrough on my model in itself, where we'll get a market structure shift, a retracement into discount, and a move back up towards the highs, right? That's typically the trade setup. That's my number one trade setup. I'm incorporating a second, and that second one now is realistically just I'm looking for where the high of, let's say we're in a bullish range. I'm looking for one imbalance to the downside to prove to me that okay, our high is set now, and I can look to short that bearish imbalance back down into discount. Not a huge trade, but decent enough, right? Um, then from there you have Ryan, he's hawking those higher time frame levels, waiting for that sweep, and almost immediately hopping in for that reversal train. So I wait for a little more confirmation. Some would say I'm a little soft, and I need that extra little layer of confirmation, but I do, because trading Nasdaq, $20 a point, we move hundreds of points a day. If you're not safe and you're not protecting your risks, you can really get ran over by that. And I'm sure anybody who's trading SPX or really anything with size could totally get smoked as a result of that. So that's why I just don't do it, and I'd rather be safe. To me, if I can score 20 handles 3 times a day, that is $1,200. That's an excellent day. That,
Heck yeah. Right.
but
Wow, dude, I'm not gonna be able to sleep tonight. Thank you so
you know,
much, man.
go back and look at some of these daily charts, bro. They're crazy. You'll
Yeah, it is so cool to have you explain all this to us, and I'm sure everybody else out there appreciates it. Just now, when I see your posts, it's just going to make a lot more
yeah.
sense. The
no,
insight of, yeah,
That's I think that's the problem. Like, this is not something that I think is like taught initially to really anybody. And look, at the end of the day, none of this stuff is created by me. I always say this, but I just want to make it known, like, this is not anything that I've created. I mean, the model itself, yes, but it's still derived from concepts from somebody else. And all of this is on YouTube. If you really are dedicated and you really want to get after it, and you're self-driven, just go on YouTube and look it up. It's all there for you. It's he a little boring, but dude is excellent. I mean, the concepts, I wanted to call BS so bad on them, and you just, after seeing them for a little bit, it's just impossible to do so because it really does work. So I mean, that ultimately is it. So
I just subscribed to your YouTube channel.
yeah,
That's the way I fall asleep these days
I'll
watching.
I'll, se- I'll
Yeah.
send I'll send you the link to a lot of this stuff.
Okay. Thank you.
Yeah, no, it's crazy. I'm telling you, man. Like, it's like and I try not to sound like a fanboy about it or anything like that, but just, again, just in terms of being able to justify things that occur, it's all I ever needed. I couldn't stand, oh, it didn't work out because, it went below this moving average, or, oh, there was no, the RSI was, oversold or overbought. Like, to me, that was just, it just wasn't it. I needed real, like, fabric to it and for it to make sense. And it's just amazing how whoever coded this thing, it was able to be reverse engineered into, what I've studied. And over time, you just keep getting better at it. And
Right.
once you see
What's your
it,
what's your background?
uh, You really want to know? I have my master's in secondary education, man, and I never taught. Taught for
Well, you're teaching now, brother.
yeah, no, true, right. I guess it's where it's useful and
Yeah, I
right.
think you're doing a lot better good, but
No,
that's just
yeah.
my
So I went to undergrad. I did business management and economics, and then I just really had no idea what I wanted to do. I played baseball. So I ended up coaching, and that kind of got me in the door. Oh, maybe I'll teach and coach and do all that stuff. And I then went back to school, got my master's, but all throughout, I'm working in a school as a TA and in a special ed program. And dude, it was so hard. It was with like, students who were like hit you and stuff like that. So it was difficult. And I was just like, how the hell can I like speed this process up and not work until I'm 65 years old? Maybe,
right, right.
investing, I can, put some money away and start making some, right. And, realistically, I did get lucky because when I came in, knowledge wise, like nowhere near where I feel like I am now, but I came in with a good sum of money at the right time, obviously, when everything shit the bed with COVID, and made some good money. And, luckily for me, Katie's in here, but Katie was one of the people who were like, all right, dude, you kind of have to like figure out how to do this because, it's not always going to be like this. And, at the time you're like, yeah, we'll see, we'll see. And then it's like, oh shit, it actually is getting much harder. Everything's just not going absolutely berserk every day.
Well,
So,
that's what happened to my wife and I. We got in before COVID. Got into trading before COVID started, and we had a bunch of money in the account, and we quadrupled it, not knowing what the f we were
oh my
doing.
God, yeah,
And then the next year, we lost 30% of it real fast, and
yep.
then we were like, "Oh, we got to learn this."
Yeah, no, you gotta learn how to do it, man. That's the thing.
Yeah,
Like, I'm glad that I had people who, and it's nice. I mean, for anybody. Look, wouldn't say, yo, you need to join a Discord. You need to have a mentor. I think that's really like a reach. Yeah, is it helpful? It could be, sure, but I think just having a couple people, for you in your situation, like, your wife's into it too. That's great. You have somebody you could talk about with, and somebody you trust who's not going to just, or you don't feel like is, hating on you, hoping that you don't do well. They mean well. So, KD, Ryan's another one. Over time, more people come and, some go, but, having like a nice little core group, and that's what I'm obviously trying to build over, with the group that I have now. It's like, get people who are like, have the same goals as you connect with. There's like subgroups within the group because, some people hit it off and they're just friends, and they, whether it's market or just whatever talk, you become cool. And then, do you really know? Maybe, maybe not, but like you have a good feeling that these people actually do have like your best interest because you're trying to achieve the same goal, obviously, but they're
right.
looking out for you in a way where, yo, Mando, you're doing something really fucking stupid right now. All right, that. You know what I mean? Like to have that is really, really helpful. Uh,
Right, right,
I
exactly. What part of the country are you in?
I'm in New York, man.
Oh, nice. I went
Yeah.
to college in New York.
Oh, really? I'm not.
Yeah,
So,
right outside the city. It was rough, but it was
oh,
cool.
really? Yeah. Yeah. No, I'm
Yeah.
away a little bit. So we got nice woods up here. We actually have farms in New York. Who would have thought?
Well, I grew up in Northern Connecticut, so
Oh,
I spent a
no,
lot of time fishing and hunting upstate New York.
exactly. No, you know exactly how it is. Yeah. No, Connecticut's not too far.
Yeah.
But yeah, man.
And
So
one thing I wanted to say for just real quick, and I promise I'm gonna shut up,
no,
just to
you
give you a
got it.
shout out, like I was saying this on a space earlier, we had a gentleman come in, he's David, I forget his last name, he's like an economist, he's an awesome dude. We
Mhm.
just started with like 20 of us, it turned up to like 140 people because David came in and a couple other big players came in and they started dropping knowledge and I was asking questions and they were really excited to kind of get involved in like trying to dummy it down for like some of us that are just really getting into this hardcore. But the evolution of information on FinTwit in the last 18 months with people like yourself has exponentially grown. The not your knowledge has exponentially grown
Oh,
and it's
dude.
being passed along to people like myself. And what I want to say is anybody who's listening, with FinTwit and people like Mando, you can get a master's degree in this stuff if you pay attention to the right people, focus on the right people, and just try and then literally try to absorb this shit. I've got friends right now on 6 other spaces that are talking about whatever, just making fun of each other. And I'm over here like, this is the shit I need to be listening to.
Yeah, no, I mean, look, like at the end of the day, like, I look back just a couple years and you're just like, wow, dude, this is crazy. How much of, growth in just such a short period of time. And I mean, look, everybody wants to make the money quickly and all of that, but if you're playing for a long game and, your ultimate goal is to be sustainable long term at doing this, like I mean, I wish I had like a realistic amount of time that I put in, and I'm not just saying that to, pat myself on the back or anything like that, but by you putting in all that additional time, whether it's watching YouTube videos, listening to spaces, talking to someone in the DMs, like all of that stuff, it really does add up over time. And I've seen it so many times, and I'm not going to call out anybody specifically, but this is the thing that probably annoys me the most. It's like, oh, I want this so bad. I want, this is what I want to do forever. I want to be full time at this. I want to do this, blah blah blah. And then when it comes time to show up, they're nowhere to be found. That is probably the worst thing that you can do, not only to yourself but to other people too, because you're putting on this big facade and everything like that. And then when the time comes, like, look, I'm on live every day. Like we do this every day. Like, we're here, but I can't. I'm not gonna deal with, oh man, I had a really rough day today. Oh, what happened? Oh, well, this. And it's like, well, dude, you've not come to anything to further your knowledge. You're not going to just learn this by, what do they say, osmosis. It's not just going to come to you naturally. Like, you really do need to put in time. And the amount of hours I spent listening to this freaking guy's YouTube, and trust me, he's not the most entertaining person to listen to, but I think, sucking it up and listening to it, and I bought in early. I think that's a huge thing too. Whatever strategy it might be, if you're finding some sort of success with it, run with it, capitalize on it, and continue to try and enhance your knowledge going forward with it. I know Katie's laughing because he knows how boring the videos are, but there's so much information packed in them. Whether you're taking notes, whether you're journaling, there's so many things that you can do to get yourself further along and kind of expedite the process a little bit. Ultimately, I think it is important to learn. I hate to say it, but like the right things. I think a lot of people focus on nonsense and things that aren't going to help you, trade a 5 minute chart on a scalp trade that you're anticipating taking 20 minutes. I wouldn't value macroeconomics as much in that situation. There's little caveats to it, but, to me, it's like, figure out like realistically, like what type of trader you're going to be. If that going to be somebody who's looking for a little bit farther out in swings, okay, that's fine. What, strategically can you do in that situation to set you up better? What times of the day are you actually able to look in and check on your positions, see where you're at, maybe update some of your charts? I know a lot of people work and do it too, so it's like, it's a big ask. And for me, I really can't be doing anything other than watching this when I'm in something, because again, I'm not anticipating holding this trade for too long. I like to scalp. That's, to me, it's been the most effective way for me to, win in a sense. So for me to, get distracted or get a call, like if I get a call and I'm trading, it's immediately hanging up. Like I'm not even looking who it is. I'll come back to it later. I got to focus on what I'm doing because again, this is real money, one, and two, one split second, one candle formation, we get a little bit more information given on whatever the next 5 minute candle is, and I'm not paying attention to it. This thing can back up on me quickly, and then I'm totally pissed off. You know what I mean? So, it's really just a matter of like figuring out what's going to work best for your schedule. Let's say I can take a lunch at whatever job I have. Maybe I can, have a snack at like 10 o'clock, get me through, and then I can look at 2 or 3 for the silver bullet, 2 to 3. All right, nice. Then you have an hour where you can look. And, again, through back testing, I would encourage everybody to back test it for yourself. But from 2 to 3 every day, something that I've noticed is you're going to get pretty decent setups throughout that time. So if you're able to look during that time, great. You could trade for, an hour a day, and you can do pretty well, and then continuously obviously progress as time goes on. But yeah, there's a lot to it, man, for sure. And I'm obviously caring about it and wanting to get better at it is I think it's number one. And I think a lot of people say it, but nobody does it. A little off topic, but another thing that drives me absolutely insane is when something happens, whether and it goes against them or something like that, and immediately it's just a million excuses. I mean, you see it everyday life completely. Oh, why did you get a speeding ticket? Oh, well, I was going downhill and I didn't see the cop there, and I was fiddling with the race. automatic excuse. Oh, why did you make an error in the baseball game? Oh, well, the field was shit, and the pitcher was throwing balls, so I was sitting there just waiting around all day, and I wasn't ready. They're just making unlimited excuses. That same type of crap happens in trading. Oh, well, it's bullshit. The market's manipulated. Oh, I took this guy's call out, and and it didn't go my way. But when you win, you take it. Oh yeah, I won. You're not saying, oh, that dude who gave me the call out did a great job. That's why I think call outs are also terrible. That's a story for a different time. But um, everybody just automatically makes excuses instead of just owning it. Yo, it's okay to fuck up every now and then. Like it's human nature. Everybody's gonna fuck up. So if you can just accept that and grow from it rather than just look for an excuse and blame somebody else, I think again that leads to the whole concept. Like you kind of can't look for anybody else to hold your hand for this. I don't think it's sustainable. So it all comes down to you. Do you want it bad enough? Are you going to take the necessary steps to make it work? A lot of people have. I know people personally that have just grown exponentially. There's people in this chat right now that I'm looking down and seeing these names. They've just grown insane amounts in just a short period of time. And it's all eventually going to click. They might be going through, a patch where they're up and down, but the farther along they're getting, I know they're putting in the work to do it. They're going to be just fine. But on the flip side of that, the people who say they're doing all the right things, they're just not being honest with themselves, and it's really not going to pan out for them well, I don't think. But
Thanks so much, brother. I really
you're good, man.
appreciate it.
You're good. All right, let me just check in on these comments. Traders who use better, more typical strategies. Oh, yeah, I know. Yeah, Mando moves stocks. Yeah, no, not happening. Um, don't trade. Trend days, chop days have a lot to do with positive, negative GEX. I have no idea what that is, man. I'm sorry. To me, it's I don't mean to say this in like a negative or a jerkish way, but like to me, it's just irrelevant. You don't really need it. Do you plot imbalances on all time frames or just the hour? Yeah, I plot them on all time frames, but again, I have them spread out into different charts. So I'll have my 5 minute levels on my 5 minute chart. I'll have my 30 minute levels on my 30 minute chart. But if an imbalance is forming on a 30 minute chart, you would expect probably multiple 5 minute imbalances to form within that 30 minutes. So that's a way you can look at it. But those are just some of the questions. Oh, I got one more request. Oh. And if anybody else wants to grab a mic, feel free. If you have any questions or anything like that, you can pop on up. What would you do to sharpen your trading skills? Okay, yeah. So ultimately, in terms of sharpening your trading skills, I think it really just comes down to one, learning something. And again, it doesn't have to be what I'm teaching. You can use other strategies and make money. I'm sure of it. But learn something that you can back test, repeat, and you know justify or be able to explain why it worked. Right now, you might be in a position, Fuji, where you're like, "Oh, I have no idea why this worked or anything like that." Maybe in that situation, it might be good time to reach out to, let's say you're trading. I don't know, if you're trading like what I'm trying to think of a strategy that somebody else uses. I really don't even know. But let's just say you're using, smart money concepts, and, you're trying to figure out what model would best suit you. And I say model rather than setup, because a model is something that you can repeat, something that you can back test, something that you can explain. I think that would all three of those go into what makes a model rather than just like a setup, I guess. And again, it's got to be something where you can go back, look later on at the day, and be like, oh wow, okay, this makes sense. I see why this works. And again, even in situations where it doesn't work, why doesn't it work? You should be able to justify every move, and that's why I challenge anyone: send me any chart, any move that has occurred. I guarantee you. Again, you might not agree with my reasoning, but I can give you justification as to why it might have worked, why it might not have worked in that particular situation. And I think that is just from years of me doing it on my own and going back and testing it, obviously learning the right concepts. And to me, what I've learned, I think, is really, really a great conceptual understanding of the market. And again, you don't have to use it. You can use whatever you want. But I think learning something that you can, again, use, make sense of it, back test it, all of that comes together. And when that all does come together, it's extremely helpful. And, you're not just kind of like shooting blanks. I made a tweet yesterday, actually, and it was like, you should be very skeptical of everyone that you see on Twitter who is, talking this big game, doing this, doing that, because if you can get a pretty good idea of, if somebody really knows their model in like 5 minutes of talking to them. Like if they're just stuttering and just, all over the place, really hard to follow. Like I'm just like, why would you even consider following somebody like that? That's me. I think eliminating a lot of the noise that you would see on Twitter. Oh, well, this guy's a good trader. Well, do you really know that? Like, have you heard him speak? Is he articulate when he's like typing out, or giving some sort of education, and not cookie cutter stuff that you can get on Investopedia and just copy and paste it? Because there's so many people who are just good at Twitter and they're not good at trading, and they've shown no inkling of being good at trading, but millions of people follow them and sign up for their groups. It's pretty mind-blowing. But to me, clearing out excess clutter, noise, and stuff like that, I think it's a very beneficial in the long run for not only your mental, but just your success overall. But let me see if there's one more question, and then Katie, if you want to pop up. Gamma, yeah. I got to be honest, man. Like, I'm sure there could be some sort of correlation, but to me, it's just not something that I would use or have really any interest in using. I again, like, I'm sure if you were able to backtest it or talk to somebody who's really mastered that concept, they'd probably do a fine job. But um, I don't really subscribe to that idea really at all. But what's good, KD? You still there?
Yo, I'm here.
Sorry, I went ranting. What's good, man? What are you up to?
Nah, I'm just chilling. I'm listening to you. It's a good conversation.
Yeah, no, I'm probably gonna wind it down here. But if anybody else has any questions or anything like that, feel free to shoot them down there, because I'm gonna get going shortly. But yo, I just popped on Fortnite, got that dub. I'm feeling good. I'm gonna have to get back on there and play a little more. But I got a bunch of charts done, and I think, I don't want to say no man's land, but like I'm still feeling pretty strongly that we're gonna reach up, grab that liquidity at 468, and then from there, I'm gonna join Team Surface over here in the comment section, and I'll look for lower prices from that point. But until then, I'm still leaning for a reach, even if it's the most slightest sweep. Um, think about it. Let's think about it logically. For us to move from that rejection at 15,468 to a low of 14,137, so that's a net of what, 1,330 points. For that to occur, like, clearly somebody had to be going short at that situation, right? That's the only logical, and that goes to any concept. Anybody who's ever learned anything about the market, they would tell you that if price goes down, what does that mean? Somebody's selling and price is moving down, right? So, to me, for us to reach up there, take out that liquidity, that's probably going to be a substantial amount of liquidity. And that dates back to even, months ago when I was, half-heartedly joking around about all-time highs. I thought, all right, look, if we were to get up to there, right? Think about all of that liquidity that's just parked up there chilling, right? That would be a beautiful place to reach for, just to send this thing into oblivion as we move on into 2024 or whatever. But I really I don't know how realistic that is at this point. But again, this is another swing high, and while, again, taking liquidity, fantastic, that can bring us lower on a bullish retracement, right? And to me, at that point, while I'd be looking for lower prices only until discount, right? And at that point, I wouldn't even be able to give you specific numbers at this point, because I don't know where this high is set. But even if we were just to poke our head just a little bit above, we're looking at, potentially a 1,000 point retracement. and that would technically be in bullish market structure. This entire move that happened over the last 2 weeks, this is technically happening in a bearish market structure, right? Obviously, the higher time frame liquidity getting swept, that would give you an idea that this actually wouldn't be a bearish range and more of a bullish range. But yeah, no, that's pretty much my thought process moving forward here. And I'm gonna jot it down again, and if I'm right, great. Actually, potentially scary for bears. I'm just going to go through another potential idea, and this is why I think, for anybody listening, this is why I think a lot of the Twitter gurus and furus, they get away with being wrong a lot, and it's because of how fractal the market is, and how it really, in this particular instance, we have a bearish trend inside a bullish trend, inside an overarching bearish trend, inside market from the beginning of time is in a bullish trend, right? So they don't talk too much about their time frame for a lot of the moves that they're expecting, and that I think allows them to kind of get away with a lot. So I see somebody else commented here, but it's not popping up just yet. I don't know why that's happening.
Yeah, man, I don't want to shift the conversation too much, but I really do like the idea of like, again, what Twitter was like when we originally got on 2020, using it as a journaling, a way to journal, keep yourself responsible for the ideas, but also to, use it as a way to reflect. It's unfortunate though. Like we still see it, get abused by some groups, and then like, bro, all the evidence is still on Twitter from previous.
Yeah, right. I think people think they magically go away, and when you suspect it and you can't go back and find it, you're like, damn it, I know this dude said that Nvidia was going to $80. Well, I can't find it. What the hell? And then you realize they deleted it. So the next one that comes, you screen grab it, and then you're just like, oh, yeah, what happened to this one? You're still selling your memberships though. I don't know. It's crazy. It's
Bro,
crazy.
it's only $179.99 a month, but I paper trade.
Right? No, exactly. I mean, look, I know there's people in here. I totally would encourage everyone, just vet the people that you're looking towards for whether it's education or just any commentary really, because that whole like stat about like 90% of people just like not being successful at this, like I totally believe that's true, and that's why like I don't mean to do it as a brag or anything like that, but I post trades, I post my ideas and things like that, because it's like I don't want anybody to come at me and be like, yo, you're full of shit. That would be really annoying. And that would really piss me off, because I just put way too much time into this to, feel that way. But, luckily, I only have one person that really gives me a freaking hard time. And she clearly just does not look at anything that I post ever. So, I mean, she's like, oh, you give alerts. I'm like, no, I don't. I've never given one alert in my life. I think they're the worst possible thing for any trader to look towards.
No, absolutely, dude, absolutely.
Not
That's always the thing we've talked about, like through the end of time, is like there's no value in providing a lecture whatsoever.
No, I mean, look, you think, oh wow, this dude's a great trader. I'm gonna take his ideas and I'm automatically gonna be good. Well, one, you don't you don't necessarily have the same type of risk parameter as that person. You might not, you know, I don't know. There's so many little things to it. You take an alert from somebody, maybe that little bit of delay that occurs in the time that you get the alert from when you place the trade, it's just a little later, and you might not be happy with the gain at that point, but that person's scaling out at 20%. Maybe they have a much larger account, so 20% looks much different to them than what it would look to you, and you're not happy with that. You stick in, you get your ass kicked on the trade. Also, going back to what I was saying before, and I think this is the worst part about it, is when you start taking alerts from other people, you're looking towards them, and when you win, you're not really crediting them, which is it's fine, but when you lose, you're automatically putting the blame on somebody else, which is terrible for your own mental, because you're, one, just not accepting that I made a mistake. I fucked up here, and this is how I'm going to grow from it. You don't know, because all you know is, oh, he's telling me to push the button, or he or she is telling me to push the button here. I'm going to do it. I don't know why the trade would work, why it wouldn't work. It's just not sustainable, in my opinion. It truly is kind of, to me, a reason why I would say about 50% of the followers that I have are probably no longer on here, especially the people from 2020. It's amazing. You just see, every now and then you'll see like a retweet of like a sports thing or a politics thing, and you're like, who the hell is this? And then you realize it's somebody who followed you, and you followed him back from like 3 years ago. It's like, oh shit, he's on. He ain't looking at the market though.
Yo, did you catch that imbalance down this morning? I didn't get a chance to look back
No, I
for trade history.
I wasn't paying attention at all. I was, I don't even know what I was doing this morning, to be honest with you. The only trade I took today was that 2 o'clock silver bullet. I mean, yesterday was actually pretty insane. So like, I built myself a little bit of cushion for the week, but um, that 2 o'clock trade, it happened immediately at 2 o'clock, and the difference was like 30 points from what I could have possibly made. And I don't want to say I mismanaged the end of the day. It did take forever. Don't get me wrong. Anybody who was in the live with us knows it was taking forever to get going. I didn't waver from it. I knew we had the bullish breaker, and it was holding up perfectly fine. But the difference was it took so long for the actual move to occur, that it's almost like you're out of time here, and it didn't reach my ultimate target. So when that happens, obviously I'm sliding my stop up. So I had my stop slid up, and I only ended up making like, I think, about 12 points on it. So it really wasn't anything at all, but it's okay. It is what it is. I mean, to trade that, if I was trading that in options, I would have gotten absolutely my ass kicked because it took so long. And, just, again, when you're taking trades on options, and again, you could be right ultimately, but if you're just sitting in that thing, especially on a 0 DTE, or a 1 DTE or something like that, like theta is just going to chew that contract to oblivion. It's not even worth it at that point. So if it's taking too long, you're probably better off just getting the hell out of there. But I'm just going through right now. Let's see, what do we got here? Any more notifications? No. Oh, I got somebody message. Okay. How would you go about expanding your knowledge on learning how to trade? What would you study or read to sharpen your skills on trading? Okay, so realistically, me personally, I'm sure, again, you can ask multiple other people. They're going to give you other things. But to me, if you were to, I guess, really be at like step one, I would say to invest your time and not invest your money, I guess you could say. I don't think it would be very helpful to join any sort of group, and this goes for mine as well. If you're a beginner, never looked at any market, anything like that at all, you might just be a little caught behind. I think having some sort of background knowledge is huge. So, I wouldn't recommend joining mine in particular. While I think I can answer some questions for sure, I think just a little bit of enhanced speed that goes on intraday, it might be a little overwhelming, and that's not something that you'd want. So I would say, honestly, just go on YouTube and look up the Inner Circle Trader. That's where I learned all this stuff from. And at that point, you don't really need anybody else. I mean, is it helpful to have somebody who's going to respond to questions and all of that? Yeah, for sure. But if you're somebody who can learn independently, and you feel like you don't need somebody else to ask questions or bounce ideas off of, I really truly believe that's really all you need. Just go on YouTube and look up his stuff. There's at times, again, super boring. It might seem super complex, but the more videos that you watch, takes a lot of time, but the more videos you watch and the more knowledge that you accumulate over time throughout, and you start to put it together. And the line that I say that I think really suits it well is, once you start to see it, you're not going to be able to unsee it, because it's something that repeats, and it's doesn't change. It's not like anything is changing up in terms of how price is being delivered. it might be different in, how much it does on a specific day, or, the type of moves that we get, but just overall movement. And I guess it's really just the idea of liquidity and finding imbalances in specific price levels that is just a great differentiator for anybody who's trying to learn how to do this. But um, but yeah, no, I just saw the DM. That's why I bring that up. All right, well, I think I'm gonna call it quits here. And get back and play. But if anybody has any questions about anything, feel free to shoot a message over, or tweet me or something like that. I'm gonna get some charts out here in a few minutes, and we'll get ready for tomorrow. But I'll catch everybody. Thanks for popping in. If you're not following me or KD, anybody who came up and spoke, please do. Appreciate it. And we'll catch you next time.